Hello and welcome to this, the Books Crypto Club weekly catch-up on Zoom. It's Sunday the 13th of February 2022 and today we're going to be talking about, well, who knows really, could be cryptocurrency, blockchain, could be DeFi, NFTs, ICOs, STOs, any other three-letter acronym really in this crazy crypto world. We end up just talking about whatever the attendees of the meeting talk about really. So I hope you stick around, hope you find it interesting. If you do, we do meet every Sunday at 7 p.m. UK time, so you're more than welcome to join us. And if nothing else, please do click on the subscribe, click on the like, make comments. Importantly, come along and join it. So let's see who's going to come and join us today. Peter, hello.
Hey, how are you?
Not so bad, thanks. Things seem to have been fairly settled in a way. I know certainly Bitcoin's been hovering around a fairly static around about just over the 42k mark, and most of the stuff I've seen this week has been people debating about the potential impact of Ukraine and Russia, where I think all of that news and what's going on out there is already baked into the price. So I don't really think it's going to make that much of a difference.
Yeah, it should be most debating by now.
Yeah. So have you had a chance to look at any of the markets at all?
Yeah, not so much this week.
Well, might be worthwhile. I'll just pull up. I was looking at Bitcoin before. It kind of seems fairly settled, as though it's almost channeling at the moment. It's curious that when it had this dip the other day, where it dropped down to about 36, which was two weeks ago now. I think that looked like that was the base level. Where if it had carried on going further south down to 31, that would have matched where it's been previously back in July. So I know JT was on last week. He was predicting potentially some big news, and I think he was talking about it dropping down to 28 or something, which it didn't happen. And it looks like it seems to have recovered okay. But right now, if you look on the shorter charts, it's kind of like flatlining a little bit.
Yeah. The kind of very bottom of the week on kind of the low in July was around 28, 29.
Yeah, I think that was around about here, wasn't it? It was it hit
the very bottom, and then it shot back up.
Okay, because certainly it's showing down to 31 there, and it may have gone a bit further south than that, as you say. But yeah, it seems to be sort of settling down. It hit just over a week or so ago. It hit kind of like 34 and then bounced back a bit again. So. Hey, see, we've got Elena's come and joined us again. Hi, Elena.
Yeah, hello, how are you?
Hey, we're good, thank you. Good to see you back again.
Yeah, nice to be here.
And Sam's going to have joined us as well. Sam, the master of NFTs these days. Rob's joining us as well. Hello, Rob.
Quite good. I'm all fingers and thumbs. Fat thumbs today. Apologies.
Whatever you do, don't put any trades in if you've got fat fingers and fat thumbs.
I'll stay away from that side of the game, to be honest. Only the highest levels of the Jedi deal with leverage trades, so I tend to stay away from that.
Yeah, and I know you seem to be doing a lot more, taking an interest in the NFT side of things. Is that fair?
Yeah, majorly actually. I was supposed to have an NFT interview with someone today, but didn't go ahead. But I've been playing that market, but I think my Midas touch may have just been beginner's luck. I got in some projects that went very, very well. I think the congestion on the Cardano blockchain has affected me, because that was my favorite blockchain, and community based on Twitter is the one I've got the most kind of involvement with. But congestion issues certainly seem to have hit that market a little bit, shall we say.
Is anything happening with Solana as well?
There's a lot of NFT action on Solana. There's some really interesting ones. There's this one called Cops and Robbers, and the robbers have loot, and when someone's minting them, if you have a cop, you can steal their NFT. So someone can think they're minting an NFT, but a legitimate part of the game is that if you're minting an NFT whilst a cop is on, and someone with a cop NFT is on, they can steal your robber and take his loot. And so it's like an exciting part of the game is you can lose your money straight away. So there's there's some novel uses of NFTs out there, and I know a big one is mutating the NFTs. Like, you get an NFT and then you have to buy another NFT, and then you can combine them, and then it turns NFT from just a basic one to a mutated one. And for some reason, that's like a novel selling price. There's a horse game on Cardano where you can breed horse NFTs. So
Okay.
instead of horses dying through horse racing, you can have a filly and a stallion, and if you have two and you breed them, then you can breed another NFT and then get yourself more profit through selling that. So yeah, there's some innovative use.
So is that going down the kind of like the CryptoKitties route then? Because that at one point was that you got yourself a CryptoKitty and another CryptoKitty, and you bred from them and that kind of thing. So it sounds like a variation on that.
There's a lot of they're trying to like just deepen their kind of functionality. So that's the big thing, because everyone's just saying, what is the point? Is the constant question, I think, which is fairly thrown at them. But they seem to be building like own metaverse projects, and there's a lot, and also building DAOs through NFTs and rewarding like the people who are now marketing the NFTs, the project creators. They're seeming to deepen the levels to it. So there's greater rewards for holding your NFTs.
Okay.
So yeah, there seems to be quite a lot of action going around there anyway.
Yeah. And I noticed, was it today where another fairly basic looking NFT got sold for like several $1 million, and everyone's going, what's the point of that? What's the value of that?
There's a lot of manipulation out there. So
yep.
I think because everything's done through addresses, you can like sell an NFT to yourself, can't you, and stuff like that. And then everyone's like, wow, look at that big sale, and then it hypes things up. But certainly the Boss Cat, which is my most successful NFT, they've done some pretty huge sales. They've done sales that are equivalent to the BoredApes Yacht Club. So I mean, it's hard to know, which NFT is going to get the hype, but when one gets sufficient hype around it, and then all the celebrities start aping him, that really seems to carry the value of the NFT. But
okay,
it's a complex market.
But do you think for those who are looking at getting into this space, you're best sticking with the things like the apes, the yacht club, that kind of thing, where they're almost like collections in some way?
Kind of yes and no. Like, I think, well, if you want the greatest profit potential, you want to go for like whitelisting a new NFT, pick 5 up at mint, sell 3, get a little bit of profit, hold 2, see where it goes. That seems to be, you want to spread your risk, don't you? You just want to go all in, and you want an NFT with the most upside, like a cryptocurrency.
Yep. Yeah,
I guess it depends on what your risk tolerance is, because if you want an NFT that's already expensive, how much is it going to gain? And there's the risk if you buy it very, very high. It's like buying Bitcoin at 69,000, right? If you bought Bitcoin at 69,000, and you put all your life savings in it, you'd feel pretty gutted right now. And I think it's the same with an NFT. If it's already really high, would you really want to? I don't know. It's very hard, isn't it?
No, well, that's right. I've just shared on the screen now. This CryptoPunks NFT sold for just under $24 million. And it's very really entertaining looking at the kind of commentary from people who are saying, well, why is it worth $24 million and that? And the reality is, it's like anything else. It's worth $24 million simply because enough people have decided it is. So there's this whole concept of intrinsic value and all this kind of thing. Crypto's prove that's a nonsense, and it's all about perceived value in marketplaces. And if there's enough people who want to buy something, then there's a market.
Yeah, it has value because then people believe it has value, therefore it has value. So that's something I've said as well. But a lot of art, like you just buy art because you believe it has the value that it has, right? And then it's subjective. Like different societies would value different things. Like Van Gogh, when he was alive, no one appreciated him. He dies, he starts to get his work is now finite, and he can't produce anymore. A few art dealers start thinking, this would be a good marketing strategy, and then like 20, 30, 40 years later, he's a master all of a sudden. So it's always subjective what is valued in terms of art, and NFTs are like the most common form of them is art, but they'll be used for much broader functionality. I saw a house was sold, the deeds. I said this on CryptoGB, and like I got loads of laugh reactions, so I just love it. Like a week later, it comes true. So I said there will be NFTs for mortgage deeds, okay? And this guy was absolutely like laughing, besides himself with laughter, like, oh, I hate that laugh react function on Facebook. I really can't stand it. Anyway, so he's like, he thought it was like the most hilarious thing. And I thought, well, come on, this is the most logical use for it. And then a week later, a house was sold by auction and the deeds were sent on the blockchain in America. So I was just
this has been going on for a while. This is why I describe NFTs in a way as allowing us to finally implement some stuff on blockchain that's been claimed for many years. So this whole concept of provenance, traceability, originality, authentication, that's what people said we'd use an immutable ledger called blockchain for ages. NFTs are actually beginning to make that happen. And I know JT's on, and I think he and I had a kind of a conversation about that a couple of weeks ago.
Yeah.
where the whole argument is, well, you can do that anyway. It's like, well, yeah, but I've heard the same argument about blockchain, that everything a blockchain can do, you can do a traditional compute. So
yeah, that's why that's right. By the way, hi everyone. I'm very strong when I say these things, and NFTs really what we call NFTs, not the actual tech, but what we call NFTs started with collectibles, and that's it. And people created some digital cards, back in 2015-16, and they started Atomic Hub, exists for a long time. It has been really about collectibles, and then of course, a lot of people jumped on the it is NFTs, and people start to do all sorts of things in NFTs. I'll continue to say it is art and collectibles. Everything else you can do with blockchain.
Well, no, I think it's going to move on. I've seen several waves. First of all, within the blockchain world, I've seen several waves of kind of like crazes kicking in. So we had cryptocurrency originally, then we had ICOs, then we kind of had STOs. They didn't quite take off as much. Then you had the DeFi wave. Now you've got the NFT wave. So I've seen those waves happening. And then within the NFT wave, you've got, as you say, the digital artwork wave. But then there's also the music wave that's beginning to kick in, the video wave.
But music is art. That's why I say art and collectibles, Yeah.
But this is where I think it's going to go on from there, onto things like digital representation of traditional digital assets to begin with. So even if it's just like digital share certificates, it'll be a way of tokenizing what you can do digitally anyway in a different way, but just using the NFT medium for it. And then I think you're going to go on, and as Sam was saying already, you're beginning to see some successful real estate projects coming through using NFTs related to real estate. Now they're still in the early days, so Proppy is probably one of the few good examples.
Tokenization of properties with an image.
Well,
you can call it NFTs, of course. It's up to you. But for me personally, I don't think we should change what has been defined before as NFTs has been for years. People who have been into NFTs as art and collectibles.
But I think what will end up happening is it doesn't matter what we decide it's all defined as.
That's true.
It's what the market decides. Ultimately, this is the whole thing. Whenever I'm running a blockchain training event, and I say to people, okay, hold your hand up if you use a Hoover, and like loads of hands go up. You go, okay, is it actually a Hoover, or is it a vacuum cleaner? And so loads of hands go down, because we synonymously use the word vacuum cleaner and Hoover, certainly in the UK. And then you say to them, what make of vacuum cleaner is it? And it's a Dyson. And quite often Dysons aren't actually vacuum cleaners. They use a different technology. So you're using something that isn't even a vacuum cleaner, that isn't a Hoover, but you're calling it a Hoover because everyone calls it that. And I think it's going to be the same with NFTs and all this kind of stuff. And the same with blockchains. You think about blockchains, the strictest definition of, something that is blocks of data chained together, secured by crypto mining. Corda doesn't use that, but they call themselves blockchain inspired. Hyperledger is a really well-known blockchain platform running within the Linux Foundation.
DLT.
Well, exactly. So when you look at it, it's not a blockchain. It uses channels and that kind of thing. So we end up with we end up using the names that the marketing people decide we're going to use. And end of story. And I'll step off my ranting box about.
I was listening to
again.
Sam and what he was saying, and you have to be careful, man. You know, because as a lot of people never going to get out of their NFTs. You know, it's as simple as that. So it's not an advice to anyone, but personally, I stick with. Think about collectors. You collect stamps. Why? Yeah, well, whatever. You know, people collect whatever they want. I'm nobody to tell what you should collect or not. You know, it's up to you. But if you are in it to action because you don't enjoy it and you really like it and you want to keep it, you know, as a true collector, if you are just in it for the trade and for flipping it, be very, very careful because it's very illiquid market still, you know, and you're gonna struggle, you know, then to sell it. If you don't stick to things, I find Atomic Hub, for example, there's a lot of true collectors, you know, of digital cards, you know, and certain collections are amazing, you know, DC Comics cards and stuff. I got some of them, you know, and those I know people always gonna buy it because there's always the market for those, you know. If you go out there and start to buy everything that somebody, you know, launches, and I explain as well how people do it, Gary, right? I mean, I launch a collection of 1,000, yeah, and I'm going to buy with my other 100 wallets. I'm going to continue to do a little bit of wash trading and pushing the price up, you know, until some fools start to come in and buy it, you know. You know, and as others are buying it, I'm selling it, you know, and then that's it. Who are you going to sell it to?
I think the biggest market is FOMO. It really is this whole fear of missing out. Yeah. If you can build up the hype of something sufficiently, you know, and whether that is snake oil or whether it's the next goldfish or whatever, and then you get people who think, well, I know this is all hype. I know it's all a bubble. But as long as I can get in and out before everyone else does, I can make my margin and I'm happy, kind of thing.
By the way, it was a figure of speech. I didn't say I'm doing it, yeah? Just to be really clear.
Yeah, that's no problem. I was going to ask Peter, though. Peter, I was curious, because you look at some of the fundamentals, particularly around what's going on the Bitcoin network, do you look at things like Cardano's blockchain and Solana as well? Or do you just focus on Bitcoin and Ethereum mainly? Yeah,
at the moment it's mostly Bitcoin and Ethereum, as I give a kind of good idea of what's happening in the market. Bitcoin and Ethereum are like somewhat different. Like over time, I want to kind of expand which kind of blockchains we kind of look at, but yeah, for now it's mainly them two. Okay. And then also, to some extent, kind of NFTs and kind of traditional artwork as well is also kind of used for money laundering as well. Which is like figures.
Yeah, and that I think is where it's going to be interesting, because like the NFT that went for $24 million, straight away people are saying, oh well, is that just someone using it for money laundering in some way? Which it might be, or it might not. But the reason I was asking the question about the fundamentals is that it's interesting because I think NFTs are having a dramatic network effect on the blockchain that they're running on, and so. I'm pretty sure it must have had an impact in some way on the Ethereum network, but that doesn't necessarily affect the price. And so I was just curious if anyone's done any analysis on that.
In the kind of medium to long term, if the kind of volumes stay up, then it would sooner or later feed into the price, because it does increase essentially the GDP of the platform. So the kind of the value of the service is provided by the blockchain.
Okay, because this is where it's interesting again, because Sam was talking about how in the art world, Van Gogh's art rocketed after he died, which is kind of like putting a hard cap on the amount of paintings that are going to be available. And that's where, you know, one of the core differences between Bitcoin and Ethereum go, that Bitcoin's got this hard cap of 21 million Bitcoin being the most it will ever go out. But if I remember correctly, with Ethereum, there's no hard cap. Unless someone wants to correct me on that. I seem to remember that doesn't have a hard cap.
But they are doing a kind of token burning now.
Okay.
Yeah, I mean, all this kind of art stuff, it's sort of kind of, instead of having kind of a family photo that has sentimental value, it's, for example, CryptoPunks, it's an early project, which, because it's early, it's in the past, you can't kind of retrospectively create another early project, and so that creates scarcity, and because it's like a social kind of a memory, as it were, inverted commas, as opposed to personal memory, then there's kind of essentially people that are willing to trade it, if that makes sense.
Mm-hmm.
It's always looking at kind of where is scarcity and what is kind of has kind of community value.
Okay, because I think that is the difference with NFTs, and Sam, I'm sure you'll have a thought on this in there. That a lot of the stuff about NFTs, certainly relating to art, is about bragging rights more than anything else.
Oh yeah, of course. It's like the emperor's new clothes, right? So, or it's like having a Rolex, or a car. Like, the thing is that with the internet and connectivity, and displaying one's wealth, unless you want to put your face out there, when a lot of people don't want to do, an easier way to do that, if you're in kind of the crypto world, is just to slap an NFT in your profile picture. And I see that Twitter are going to blue tick verify this.
Yep.
We've got a system, and I think it's only running on Ethereum at first, but there'll be arguments for the Cardano, because the amount of Cardano wallets has rocketed. I think there's over 3 million different Cardano wallets now. So there'll be arguments for NAMI, for this to happen with NAMI as well. But if you think just the sheer marketing potential you have, I mean, if you look at, there's some serious celebrities like John Terry, for instance. He bought a Bored Ape Yacht Club. Now, this is a man that's played football at the highest level. He's internationally renowned. Now, buying one and putting that on his Twitter profile picture, and then with the Bored Ape Yacht Club, we know the kind of exclusive parties that they do. And then if you're a businessman and you're into crypto, why would you not want to go to one of those parties, right? Imagine the networking potential by meeting face to face with other people from the same space that you could do. You think there's phenomenal business potential in that.
Yep.
So I see it as having value, as like just like buying a Rolex watch and going to a meeting with, if you want to launch a project, like with some, I don't know, like an insurance project, like you're going to Canary Wharf, you want to wear the best suit, right? You want to have the best watch, the best shoes, the best tie. Like it's the digital version of that.
Just bear in mind though, if you're in the insurance market and you've gone to Canary Wharf, you've gone to the wrong place.
I stand corrected, Gary.
It's just I happen to know the Lloyd's London building is is Leadenhall Market and Lime Street, which is postcode is EC3, and any insurance company that has a postcode that isn't in EC3 just isn't thought of as a serious competitor. So it really is that bad. So, but yeah, you make a great point that it is like a badge of honor almost, isn't it? Or a badge of credibility for some people to now have their NFT as their avatar.
We also expect these assets to kind of appreciate in value over time, which is kind of what you kind of happens when you kind of buy a classic car, kind of a Rolex watch, diamonds, or kind of buy kind of a 100 million flat in billionaires role. It's a way to kind of park cash.
Yeah. I wonder as well, we're going to see it's a little bit like, successful crypto people have all got Lamborghinis. Well, apart from one who's really successful, I think he's got a Toyota Corolla and he just isn't into cars. But most people have got like Lambos, Ferraris, all flashy stuff. Maybe we'll see a similar thing where there'll be a series, and maybe it is Bored Apes or Yacht Club or whatever, where to be seen as the in crowd, you need to have one of those exclusive NFTs.
It's just a show off, Come on, let's face it. Let's tell what it really is. It's just showing off, The guys that I know that are personally loaded, the top guys in crypto that are loaded, really loaded, they take Ubers. They don't have a Lambo. They don't own a property. Everything is in crypto. Everything, and starting with CZ, and there's another four two of them are in Dubai, you know, at the moment. So it is, but I agree with you to a certain point. You know, people like to show off, and there's going to be creating that thing that you have to put some NFT in your avatar. You know, if you go into the metaverse, you know.
Yeah.
That I don't disagree with you, but I can just go and get a, you know, the IPFS image for one of the BoredApes and put that on my avatar.
Yep. But that's
So
where,
what are you gonna do if you own that?
So
You don't have any resale value on that, that's the thing.
Yeah, of course. Don't know, but doesn't mean that I cannot put in my avatar. What you gonna do?
So
Yeah.
that's where Twitter doing its authentication piece is interesting. That if they do actually authenticate that you're the owner of that digital image,
That's the only way to do it.
yeah, which suddenly actually means Twitter becomes an arbiter of social media
But
validation.
what are they going to do? Are they going to integrate to every single blockchain that is as a NFT standard protocol? Because not everything is meeting on Ethereum, yeah? There's other blockchains do it. So they're going to do integrate with all of them.
Maybe they'll just choose the top half dozen or something. Who knows? You know, and I think Sam said they're doing it for Ethereum initially. Maybe they'll just
going
do
ahead
it.
soon.
Yeah,
It's going ahead soon. They've been advertising it on Twitter, so it's going ahead soon.
Yeah. So you know, I don't disagree with a lot you said, but I'm just skeptical a little bit about certain things, you know, going forward. But for sure, in metaverse and I'm more convinced. I had an interesting conversation recently with someone. He told me like this. So all of these metaverses being built out. It's not really metaverse, virtual worlds, you know. How many people are going to be? There's going to be like places empty because you can't be physically, you know, on the same metaverse all the time. Yeah. Yeah.
Was it you that posted something about Russia's just invaded Ukraine in the metaverse?
Yeah, it was a joke. But you know, the point is, a lot of people creating these virtual worlds is going to be planned. It's going to be like those Chinese empty cities that have been built, you know, far too many, you know, who's going to be roaming around all of these virtual worlds.
Yep.
So it is, you have to understand that, you know, there's a lot of BS going on at the moment, too much hype, you know.
Talking of which, what happened to your prediction from last week?
Which one?
So last week, I think one of the last things that you said was watch out for the news in the next 48 hours because something interesting might happen. Yeah.
Well, you know, you saw what happened. Bitcoin shot up the roof, yeah? And you know why? I think we have someone here, Peter can tell you why. You know, the number of short positions put at that time was insane. So of course they went after it and liquidations and so on, you know. So we were down again.
We were talking before you came on actually that there wasn't that much of a movement, in fact. In fact, we're looking at the Bitcoin charts just before you arrived, funnily enough. And it seems to have been actually fairly stable. That, you know, if you look at it from the beginning of the year, there's not been a massive amount of movement. There was the sudden rise at the beginning of February, and then it kind of had this cascade down again, but it's been fairly quiet, I thought. And if we look in the last few days, I don't think there's been that much activity going on. No, I mean, it had this drop a few days ago of going down from what, 45 down to 43. So that's only $2,000. That's less than 5%. That's nothing these days in crypto world, isn't it? But I thought we'd see a big breakout or something from what you were describing.
Yeah, I thought as well. You know, there's going to be a little bit swing upwards. You know, but I don't think there's much appetite at the moment. You know, but look, there's Peter, correct me if I'm wrong, but the 240 billion in stables at the moment. Do you have access to that? No, I think it's 240, isn't it? Billion in stables.
I mean, yeah, I can't remember the exact number, and I don't have it right in front of me, but Yeah,
It's around that, 200 and something billion in stables. So there's a lot of money out there waiting, you know, a lot.
So by that, you mean on the Bitcoin side of things, you're talking about things like Tether and
yeah, USDC, etc. BUSD, there's 240 billion, you know.
wow.
So there's people exiting big time, and at the moment there's still a lot on the sidelines, you know.
But is that just not because they're just holding because they can see it's a bear market right now, and they're just waiting for things to settle down before they put back in again?
I mean, the kind of the long term. Well, actually, on the spot markets, the long term buyers are they quietly buy. They don't buy like large chunks at a time because they want to cost average, and they don't necessarily want to force the price up. They want to kind of buy as much as they can, as cheap as they can.
Yep.
They're kind of slowly chomping through supply. So in the past 3 months, we've seen kind of spots more or less consistently above futures prices, which means that kind of there is some kind of supply squeeze, and it's been kind of futures that has been more driving prices down than people selling, and the people selling have been mostly short-term kind of holders.
So if I remember back to my commodities trading days, when your spot market is below your futures market, that's a thing called backwardization, isn't it? Which means it's pressing the market down, as opposed to what's known as a contango market, which is where the future price is higher than the spot price. So doesn't that suggest it's going to continue to gradually drop away?
Well, the spot is above the futures. Depends, how many people go short and how many longs get liquidated to some extent. Because, like, you can see the big kind of holders chomping through Bitcoin supply, and there's not actually that many sellers. So there hasn't been like a big influx to exchanges, which we saw in kind of May, June, July. It has kind of remained, well, panic selling has remained relatively muted. So one thing is there has been kind of meaningful outflows in terms of crypto ETFs and ETPs, and then grayscale products, etc.
Okay. Because I don't know if anyone watches what's going on in the States, but have they finally approved a Bitcoin ETF? Because I know the Winklevoss twins keep trying to apply.
But not spot.
Spot, yeah. I don't know if it was approved, was lodged at least, or was approved already.
Not a spot, no.
Yeah, I think it was just lodged. Yeah, the spot ETF was lodged. So I don't think it was approved yet.
Okay, because it's always interesting. Once you do get a Bitcoin spot ETF approved, that then really opens the market up to institutional investors again, I guess, because it gives them access through a regulated product. So that's,
they can go to their bank, can't they? You know, those technophobic people which will never get with it. So, you know, like they were heard of it, they were heard the hype around it. They were like, oh no, I could never do that online. I'm not confident with technology. Same kind of people you see in supermarkets get in the queue whilst all the self-service checkouts are like empty. You know, so it's like it's that critical mass of people with their lovely retirement funds we need to shove in to Bitcoin. But Peter, I think I don't know if you're into Elliott waves. I would think that you would be. But I was watching this guy. He's a very good German crypto technical analysis. One of the few good ones on YouTube. And they often get slated, but he still thinks that the bottom isn't in, which I know isn't a popular thesis with a lot of people out there. But he was saying like this pump is going to be very transitory, and he thinks it's still that final wave. There's a final wave 5 on the Elliott waves that needs to play out, and he thinks it's going to play out, and then we're going to have the final big push.
Who was he?
He's called More Crypto Online.
No, I don't know about him.
More Crypto Online. He's German. He's not massive. He's got about 30,000 followers, but
I have a theory about some of the YouTubers, you know, but not to tell it here. But anyway, look, I actually don't disagree with that, Sam. You know, I think we haven't hit the bottom either. We haven't touched the 30K. Yeah, we haven't touched the 1700 on Ethereum as well. So there was a lot of talk and said that's the resistance points. We didn't get even close to it, you know. well, we went to 32 and to, 2000 in Ethereum, wasn't it? But 1980, whatever it was. But, I think those guys doing the liquidations with those bots, they're just building up, making sure people are longing. And when the right time, I think they're going to do it again. They're going to do a run,
So go on, Sam. Give the guy a shout out again. What is again? More Bitcoin?
His name is More Crypto Online.
Okay.
He's German. He put me onto IOTix before it pumped, so he did me pretty good. So like he's a pretty good guy. He's not a moon boy. He's not hype. He's got that. How would I say? He's got that German coolness when it comes to doing his TA. Yeah, this is the guy. More Crypto Online. He's nice and calm. He just uses Elliott wave patterns just to make, should we say, predictions of possibilities and probabilities. So he's not a moon boy by any stretch.
Okay.
Yeah.
So there you go. There's a recommendation for people watching of it. Somebody else to watch on YouTube. So I'll maybe reach out on that. That's good.
It's hard to say if kind of we've reached the bottom yet. Not convinced that this bounce is going to be sustained, but not had time this week to kind of look further into it. But yeah, guess we'll have to see what plays out. Technical analysis is a useful tool, and it gives you kind of some interesting and useful angles of the story. So we combine that with kind of on-chain data, which generally gives more on-rounded, and then also analysis on the kind of the futures derivatives markets as well, which gives you kind of a fuller picture of what's driving the markets. Technical analysis is an important part of it, but you can't tell everything using technical analysis.
It's interesting. It's a great point as well, isn't it? Sorry, Rob, were you going to say something?
Yeah, can I just jump in there? As quite a newbie, you talk about technical analysis. Is there a good place that you'd recommend where the newer ones like me can go to get some understanding of what we can look at and how to interpret it? Is there a good site that is good for newbies?
I mean, you know what? You need to kind of Google like key terms. So for me, it's all about Fibonacci retracements, and if you just write Fibonacci retracements and Elliott wave theory, I just think
I wrote Elliott waves down.
Yeah, and definitely. Sorry, Fibonacci. Let's get the Italian beat. But swing highs and swing lows. They were kind of important for my early understanding.
Well, I would look as well at longs versus shorts. Okay, you can predict to a certain degree a certain range date that might go one way or the other. So for this week, for the week 1 to 8th of February, for the 1st of February to 8th of February, the CME institutions added more longs at 8.9 more longs than shorts. 8.9x more longs than shorts. So if these guys that run the bots reconfigure the bots, they're going to take all of those longs out. So it means Bitcoin will go down. And if Bitcoin goes down, everything goes down. So I kind of tend to look at some of these things, to try to, it's impossible to predict, we know that, but at least it might give you sort of where it might go,
Yeah. I think, Rob, to answer your actual question about what are good places to go and learn about crypto technical analysis, I guess there's two types of site. There's the type of site that teaches you the theory, and ultimately crypto technical analysis is not that different to traditional financial markets technical analysis, where you're doing things like chart analysis, trends, key indicators like RSI, MACDs, and all that kind of thing. There's a big overlap with traditional financial stuff. So you could actually, I used to have a book which was, I think it was produced by Prentice Hall, and it's just technical analysis for the stock market. The concepts are the same. How to read a candle chart and how to know open, high, low, close, that kind of thing. But there are some subtle differences. And what people don't realize is that the open, high, low, closed market, daily rates and everything are synthetic, that they're not actually real. The reason I say that is that in the traditional stock markets and FX markets, they close. You know, the US stock market opens at a particular time, closes at a particular time, closes its books and so on. The London Stock Exchange is the same. Whereas crypto is 24/7. It doesn't have a close. So the open and closes that you see are a bit synthetic, but the concept of how you look at a chart and how you draw lines, patterns, that is exactly the same. The second type of crypto technical analysis are the ones who start then offering you ways of interpreting what you're seeing. And they're the ones where they get a little bit hypey. And it's all the, oh yeah, well, if you look at this, this is a descending dojo with a rising shoulders, which means, you know, the moon's about to come behind you and you're going to be a billionaire type thing. So with those, I would say just tune into a few of them. There are loads of them, you know, but I think, is it Bitcoin Boy and Cryptos Are Us and these kind of things? There's a bunch of them. Just take a look at them.
Yeah.
But bear in mind that if they were genuinely really, really good at their predicting ability, they wouldn't be running a YouTube channel.
That opinion does interest me, but then I think some of them are mega rich and they just do it because they're obsessed with it. I think that's a counter argument there. Like, because I think, like, you know, BitBoy, I can't stand him, and I don't watch his show, by the way. But
whatever he says,
caked.
try to go the other way.
Yeah, but he
No,
exactly.
I'm joking.
He's caked. That guy's caked. I'm pretty sure he's got a considerable amount of life-changing wealth. I think he just does it because he's obsessed, and he likes the celebrity factor as well.
Yeah,
it's like it's the showing off. Like, and you know, like he can command $42,000, I think, for an interview. $42,000. So I'm sure he's not. I think it's just greed. He just wants more. So, like, he's seriously wealthy, that guy.
What do you guys think about Snoop Dogg entering Sandbox? That's interesting, you know. Yeah, I know you like it, Sam.
He's caked, isn't he? Like, he's got a massive market. Like, just it's celebrity onboarding. But he's long been interested in. I think he got Joe Rogan talking about Dogecoin, which got me into crypto a long time ago. They were just talking about it on Joe Rogan, and it's that kind of wide. It's just getting more people into it. So that's what Snoop Dogg's good for. But I love. It's not just, you know, Reese Witherspoon has got into crypto, like Serena Williams has got into. They've got their own NFT avatars and on Twitter and stuff like that. It's huge.
The good thing, yeah, Sam, about NFTs. I'm into it for quite a while. I really like that stuff. The good thing is that it's bringing new people to crypto.
Yep.
That is the awesome thing, you know. And I think we're just at the beginning with NFTs. I really think, you know, it's just the beginning.
That's certainly my belief. But yeah, I think the celebrity endorsement thing is what is building awareness and everything. So, you know, if a rap singer or whatever gets into this space and they've got a following of millions of people or whatever, and those millions of people then go, oh, that sounds interesting, we'll go and get some Snoop coin or whatever it is he's promoting, then why not? You know, and then when they start realizing actually that Snoop coin isn't that much different to Dogecoin, which isn't that different to Bitcoin, then suddenly it's like oh yeah, well, I've got a crypto wallet now. What else can I buy with it? And I can have one of those avatar things, what they call an NFT. Oh yeah, I'll go and buy one of those, and suddenly the whole thing grows. I can't remember the latest data on how many people have now got crypto wallets, but certainly in the States recently they published a survey, and I was surprised at just what a high number it was that they claimed percentage of the US population had a crypto wallet. Because I presumed it would be like below 10%, and it was above it, I think.
There's two things, Gary, that I think might influence in a negative way, yeah? Or in a positive way. So one is the Russian war with Ukraine. If that happens, oh my God, just be careful, because I think we're going to enter some very dark era, you know. And people just sell. Even corporations are going to sell it big time, you know. We might see again 20K if that happens, you know. So just be aware of that, and not a financial advice. The other one is what happened 4 or 5 days ago, which is quite significant. You know, many people know it's significant, but many people do not understand why. It was BlackRock announcing it's going to offer, you know, crypto. Yeah, it's entering this space, you know, for whatever crypto trading, whatever said that they're going to offer. That means, I mean, just remember that BlackRock did the management of all money that US was giving to corporations and people, yeah, throughout the pandemic. They are very deep into the state at the moment. Yep. For them to announcing this, you know, it's going to be good news that the US is going to legalize crypto somehow, you know. So whatever order comes from the president or the SEC, these guys know it. And that's why they announced they got into crypto. If it was bad, they would not get into crypto, or they would not announce. So if that, what is coming, then it's going to be big. So it really depends, you know, what's going to happen in the next month or so. And the reason is, if Russia has to attack Ukraine, it has to happen within the next 1 week. I don't know more, because the snow starts to melt, yeah? And then the tanks and blah, 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 they can't really advance easily. And then the next window is around April, beginning of April, late March, beginning of April, when, you know, it's the ground is more solid and so on. So it's going to be in the next 8 to 10 days, I think it's going to happen. If it doesn't, then I think this good news from the US government are going to come in the next 10 to 15 days as well, you know.
Go on, Sam. Go on, Sam.
I hope it doesn't. I really hope it doesn't happen. I've been saying it isn't going to happen for a long time, and I thought it was just Western paranoia and mainstream media just whipping up, you know, because people like a narrative in the West. I'm very dubious of Western media, but with the American government telling its citizens to get out, that did make me sit up and think maybe I was being a bit glib on this, and the risk factor for me has increased. Certainly, and I'm watching it very tentatively now.
And the UK Foreign Commonwealth Office has sent out a briefing note as well to say any UK citizen should leave with some urgency. I think they described it as.
The problem is that I think, let's not get into politics and so on. The problem is that many people don't understand that, you know, Putin might not have any option now that he's at the border, you know. Because if he now retreats without gaining anything, he's going to look weak back at home, you know? So that is the problem. That is a massive problem. So that's why a lot of people, and a lot of the people intelligence that I spoke with, you know, they think that it might happen, but nobody knows, yeah? And the only thing I want to just leave it to people is that, you know, if it happens, you know, embrace yourselves, because it would be bad for crypto, you know. I would certainly exit all my positions, you know.
But then the whole thing, if you think about COVID, which in 2020, at the beginning of 2020, when that first appeared, the whole notion of supply chains shutting down, people not working, general economic collapse, all this kind of stuff didn't happen. And didn't seem to affect crypto in any significant way.
Go and see what happened when it came. It tanked. Crypto tanked.
But
when COVID was announced, and it was just right at the bottom. Yeah, 9K, whatever it was, 7 or 9. I can't remember.
There didn't seem to be a big correlation though, because I've said to some people, right, call out specific news items that happened and point to it on the chart, and there's not a massive thing. It's probably it's a good one to go away and check out. And Sam, you're into history. You know, actually go and figure out what were the key events in COVID or Ukraine or any of the big news item. Take a look at the big news items first. get the dates of when they were first really announced and when they first really came mainstream, and then overlay it onto a crypto chart. Don't do it the other way around. Because if you do it the other way around, what you do is you look at a crypto chart and you look for the peaks and troughs, and then you try and find out the news item associated with the peak, and you're justifying your arguments on that basis.
Yeah, but Gary, if you look at the charts, yeah, you will see that when COVID was announced, Bitcoin really, I can't remember, was really low. I remember that vividly, you know, and when was a lot of that FUD around China, yeah, and banning Bitcoin, whatever, back in April, he let Bitcoin to crash right down to 28.8K.
But that's not the case, because
Yeah,
the Chinese didn't ban Bitcoin.
Sorry, mining, whatever it was, I can't remember. It was around April last year.
All they did was they reminded everyone it was still banned.
Yeah, I'm not saying it's not. I'm not saying, Gary, that it is true. What I'm saying is the catalyst for that crash coming down was all of those news around China and Bitcoin and mining, whatever. True or false, doesn't matter. Yeah. That's what happened. You know.
But if we look at here, I've got the Bitcoin chart up here, and if you look at the major shifts, there's two. There's one here in April of 21, and there was a kind of a quite sizable one in May of 21. So COVID kicked in 2020. Not in 2021. COVID happened right back.
On the COVID thing, the reason why kind of there was kind of this unusual spark between traditional crypto markets is because COVID was a liquidity crunch, which hits everything that isn't cash. It's less the news and just the fact that everyone just because everything's ground up, everyone's just trying to liquidate everything they can, regardless of what access there is. The May 2021 China thing, if you look at the kind of state of the market, there was very likely to be a sell-off regardless of the news that came out. But kind of the China news may have acted as a focal point and kind of coordination mechanism for kind of many kind of people to kind of sell near at the same time. If that makes sense, but there was very large to be a sell-off in the crypto market anyway around this point in time. It just happened that news came along and people decided off the back of that news that they were going to sell what they probably were going to sell anyway.
Yeah. So in the when the coronavirus appeared, Bitcoin was around 10K, and in 2 days went to $4,000. That's in the charts for you to look at. Yeah. Right down to 4K.
And then also liquidation as well.
March 13, to be more precise. No, March 11 or 12, I can't remember. It was around.
When there was a major liquidation spiral in all market to hit everything. Every market went down.
Yes, every market, absolutely, totally. And that's what I'm saying, Gary.
That's when the kind of the effects of the lockdowns were hitting and cash, and that's why everything was selling. It wasn't the news per se; it was the liquidation, the kind of liquidity crunch that was happening because of all the lockdowns.
Okay.
It was not even. There was no lockdowns at all on the 11th of March.
There were lockdowns coming into force, and everyone was kind of scrambling for liquidity at that point.
So, but that's what I'm saying. That's the concept. That's the concept.
It was the actual economic. It was the economy.
But why? Why those economic? All of that happened because of coronavirus and the news. Maybe that was going to be lockdowns.
It was the economic reality that caused the sell-off. Because if you kind of do actual analysis and kind of news.
So you're saying if there was no coronavirus and no news of lockdown, then crypto would also crash to 4K Bitcoin?
Well, it wasn't the news that drove it. It was the economic reality that drove it, not the news part of it.
Yeah, I mean, this ties in with...
Well, the economic reality comes because of the news of it.
But the news, everybody knew what was kind of happening at that point in time. But then that was a point when kind of the lockdowns were starting to bite into people's cash flows. Otherwise, the market would have crashed a lot quicker.
I don't disagree with that. What I disagree is that it was not because of the news. The news after the news came a consequence. The consequence was the lockdown. Part of what happened lockdown, all of that was going to happen. Supply chains, liquidity, whatever you want, you can say whatever. But it started with an event. The event was coronavirus, yeah, and then it was a repercussion of things that happened after that. You know, it's the same with the war. If Russia attacks Ukraine, you know, it's just after that it's going to have a lot of things happen. You know, and you cannot say it's not because of that single event. You know,
war is bad for the business. War is bad for, unless you're in arms. Unless you're in arms, if you're in the arms trades, you might want to invest into some arms companies if this kicks off.
Yeah, I was going to say near dated munitions are always good to go for. Again, that's not financial advice or warfare advice or whatever. But fun. So that was probably a really long answer to Rob's question of where do you go looking for technical analysis recommendations. So it does come back to Robert, as I said at the beginning, one is understanding the principles of technical analysis. Another, as Peter mentioned, is that you might not be looking at all the right metrics anyway. And
yeah, I mean, for years I've done share dealing and that sort of thing. So I know that even with my share dealing, I never used to look at charts. I used to look at companies. So, well, I say I never looked at charts is wrong, but I would look at companies.
So it works exactly the other way around with crypto.
That is, yes, which is why I was saying, where can I get an understanding of the charts more than what I've got?
Yeah, and I guess, I mean, we'll have to close this off in a minute, but it comes down to the whole concept that you write that in traditional financial markets, you use financial analysis to identify which shares to buy or sell, and technical analysis to decide when to buy or sell them. Whereas with crypto, it's almost like the choose a coin, any coin, whatever, because there are no fundamentals, fundamentally, I know that's a double whammy type thing, because what the crypto platform is being used for has no bearing on the price of that crypto.
That's my understanding.
Yeah, because if it did, the functionality that Ethereum offers would make it far more valuable than the functionality that Bitcoin offers. So,
yeah. But what I don't want to do is just have a list and throw a dart at the list.
Just throw several darts.
throw 3 darts. Yeah,
exactly right. So, okay, well, we're getting on to on the hour, I'm afraid, folks. That's been a whirlwind tour of various things. So we started off beginning with NFTs and kind of like what's going on with CryptoApes and Bored Yacht Club and all this kind of stuff. And then we've blended into the whole crypto thing. Just very quickly, any immediate questions or comments before we close off for today? Everyone's gone silent. So on that basis, I'll call.
Is anyone going to the CryptoAM event?
I'm not. It's on, is it this Thursday?
Yeah, 17th. Yeah.
Looks really good. So a quick endorsement, as JC says, to the CryptoAM crypto event this Thursday. You can find details on, I think, CityAM. I've got some stuff on it. And I'll try and post something in the YouTube video as well. Or anything that CityAM are doing, CryptoAM, is always really good and well recommended. So with that, I'll close it for today. Say thank you everyone who's watching. Thank you everyone who came along today. Anyone who's on YouTube, click the subscribe, like, comment, blah, 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 blah. See you all again. Go and wash your hands and be safe.
Thanks very much.
Bye now.
Bye.
Bye guys.